Hello, everyone. A very good evening. Today is 18th of November, all right, 2024, being Monday, the first trading day of the week. All right, so I hope everyone has joined in for today's third live streaming session where we will be focusing towards education, correct? Education based on technical analysis. So I hope everyone is present and we are good to go. I hope my voice is audible. I hope there are no technical glitches taking place. All right, so let's get started. Let me start today's live streaming session with a quick introduction about myself. I am Harsh. I have 8 years of trading experience. I mainly trade the Forex pairs as well as the commodity market pairs such as oil, gold, silver, copper. I even look at the US indices such as the S&P 500, the Dow Jones 30 and the Nasdaq 100. I am more of a technical trader. I specialize in technical analysis, right? Such as supply and demand, price action, order flow analysis, wave analysis, swing analysis, and Fibonacci retracement analysis as well. When it comes to technical analysis, the field of technical analysis is so exhaustive, right? There are many concepts, many strategies that people follow, but I am sticking to the ones that I have mentioned. I have been blessed to be trained and to be mentored by some of the brightest minds in the financial markets. I have had the privilege of being, taken under the wing of certain people who used to trade as floor traders, correct? People trading on the floors on the Chicago Mercantile Exchange. So it's been a great opportunity and a blessing for me to learn and experience and gain experience from people who have had hands on experience during those market sessions when people used to trade physically on the trading floor. I have also been successful in handling around $20 million worth of portfolios and have been able to generate around 30 to 35% of profits on an annual basis. The reason I'm showcasing and informing you about all the details is so that you can be rest assured that the information that you are getting, the content that we are providing is coming from a trustable source, someone who has the experience, who has the knowledge, and who has the expertise to back up things, correct? So let's get started for today's live streaming session number three. Remember, our focus is going to shift from analyzing hot stock opportunities to education, correct? This is the third live streaming session, and in this session, we will be focusing on technical analysis education. So, let us have a quick look in terms of what the market has done, how we have been consistent when it's been coming, when it boils down to, proving ourselves in terms of our trading strategies on a consistent basis. All right, so all the way from 18th of September to 7th of November, we have been consistently delivering and maintaining a consistent rate of return, correct? So we have been able to create a profitability of 135%, right? Over a span of 34 trades in 2 months. Today marks the milestone where we have completed 2 months in terms of analyzing, finding out hot stock trading recommendations, and closing them for a profit, right? So it's been 2 months. It has been started all the way from 18th of September, with today being 18th of November. 2 months have been accomplished, and we have been phenomenal when it comes to, providing such extraordinary profitability percentages, correct? We do have trades which are currently running. We call them as current holdings, correct? Current holdings are those trade hot stock recommendations that have been provided to you, and they are always based on a clear structure in terms of the date, in terms of the stock ticker symbol, in terms of the entry price, and in terms of the 5% profit level. Remember, we are currently showcasing our skills to bring awareness, to make people understand that yes, it is possible to make money in the financial markets. And we have also analyzed and understood that overall 5% profitability is a good rate of profitability that can be accomplished, right? That can be made on a consistent basis. Though we do provide you with the 5% target, we also provide you with further targets, right? Target number one and target number two. Today's entire live streaming sessions, especially the first and the second live streaming session, has been based on showcasing our potential in terms of making money. We had shared these two particular trades, right? With the latest one being RBL Bank, which was discussed on the 14th of November. 14th of November is exactly last week's Thursday. So I'm pretty sure everyone is able to see that we are providing you with real trading strategies, real hot stock recommendations on a real time basis, right? With a date such as 14th of November, which has just passed, right? A couple of days before, we have been provided, you have been provided a trading hot stock recommendation on RBL Bank, and a couple of days before that, we had provided you with another hot stock recommendation on Zaggle, listed on the National Stock Exchange. So these two particular trades have been doing phenomenal, right? Yes, the markets are closed, but I just wanted to get to your attention for people who are attending the third live streaming session and for some reason have not been able to attend the first and second. We just wanted to showcase you the power when it comes to, providing you with hot stock recommendations, and they are running towards target. So we are talking about RBL Bank, and the prices have already, have entered into our 5% profitability target area. Similarly for Zaggle, if I hope everyone can see my screen, and we have been profitable in this particular hot stock recommendation as well, where we had provided to you on 11th. Uh, Around 11th of November, and the trade is running into our favor, right? So we are almost sitting on a cumulative profitability percentage of around 7%, right? So yes, last week the hot stock recommendations were provided, and this week you're already sitting at 7%. How unbelievable it is, correct? It is fantastic, and it is practical, it is attainable, and that is the reason I, Harsh, at Dolphin Markets is providing you with such high value content for your benefit so that you can analyze the way we look at markets, the way we provide you with trading opportunities, and can understand that yes, there is someone out there who understands that they need help, they need assistance in terms of analyzing the markets and helping them make money, right? Money by taking trades and by closing in profits, correct? So I hope everyone understands we are here to provide you with top notch value, right? Value in terms of analysis, value in terms of hot stock recommendations, right? Money making strategies, as well as in terms of education. So I hope everyone has got a good understanding. Yes, we have taken trades in the past, last week, and most of them have started to turn in a favor and are making money, money, money. All right. We did look at the other pairs as well, and we had talked a lot about them. But since the market is closed, let us shift our focus from the financial market to education, right? So let us start with today's technical analysis. Remember, today being Monday, today being the first day of the week, we always want to start with the basics. Remember, we are here to provide you with hot stock recommendations when the markets are open, but when the markets are closed, we want to shift from the stock market into technical analysis, correct? And we will be focusing more towards the forex and gold markets because the stock market is closed. doesn't mean all the other markets across the globe are closed as well. The Forex, gold, and CFD markets are open 24 hours a day, 5 days a week, from Monday till Friday. So we would be showcasing our education in terms of providing you with educational content, as well as if there are certain hot stock recommendations in these sectors in the international markets. As and how time progresses, we will let you know. All right, so let's start with trading education, right, pertaining to technical analysis. Today being Monday, we are going to be focusing on the basic technical trading strategy. Remember, everyone out there who thinks that yes, we are aware of what are the basic technical trading strategies out there, but you have to understand the basics are the most crucial aspect when it comes to technical analysis, myself included. No matter how advanced, how experienced I've become, I always return back to the basic technical trading strategies to make sure my foundations are clear. Because if your foundations are clear, you can build upon your foundation and make it stronger. There are many people or many investors out there who try to run and skip this step. They want to jump to the advanced technical analysis. But to all those people, I want to make it very clear, if you do not start and, clarify your basic trading technical strategies, it won't make sense for you to go on to the mid level or even to the advanced level. So let us quickly start in terms of technical analysis 101, correct, the basics. I'm pretty sure everyone is aware of what technical analysis is, but let me give you a quick definition. Technical analysis is a method of evaluating statistical trends in trading activity, typically involving price movement and volume. It is used to identify trading and investment opportunities. Unlike the fundamental analysis, which attempts to evaluate a security's value based on financial information such as sales and earnings, technical analysis focuses on price and volume to draw conclusions about the future price. Remember, technical analysis is based on chart patterns, what you see on the price chart. For us as technical analysts, we believe that price is action. Price is king. Whatever you are seeing on the chart is already been discounted for, whether it is in terms of uh, news events, whether it is in terms of any important impact that has created some kind of influence in the particular market. So we believe that whatever we see on the chart is discounted for everything. It includes all the information across based on which the prices are moving on the chart. All right, we are going to be looking at examples on the charts as well, and it always is based on evaluating price trends and patterns, and therefore identifying potential investments and patterns. We are basically identifying certain structures in the past, and based on the structures in the past, we expect them to repeat in the future, and that is the crux of technical analysis, right? Something that has happened in the past, we expect it to happen in the future, right? With everything, with seasons happening, with summer, with winter, with autumn, they keep repeating at certain intervals. So technical analysis is something similar. If we do understand that winter has started in the month of November, it will eventually start in November again next year, correct? Something similar in terms of giving you a very simple and clear understanding of what technical analysis is, correct? So, like it's mentioned over here, technical analysts believe that past trading activity and a security's price changes can be valuable indicators of the security's future price movements. It may be contrasted with fundamental analysis, which focuses on a company's financials rather than the historical price patterns or stock trends. So, this is the key takeaway when it comes to technical analysis and how it is different from fundamental analysis, correct? So, starting with the basic technical analysis, we would be talking about trend lines, correct? I hope everyone is aware of trend lines. Nonetheless, a trend line is a line that is able to connect as many pivot points on a price chart as possible. I hope you can see my screen. The price on a price chart can move only in three directions. Either the prices can move in a bullish trend, uptrend, or in a bearish trend, downtrend, or sideways, correct? So here we have the example of an uptrend or a bullish trend, correct? Then we have an example of a downtrend or a bearish trend. And similarly, we have something called a sideways or neutral trend, right? Where the direction is unclear. Now that we have looked into this, let us go to the charts because I want to make sure that I am able to provide you with examples based on real market conditions. Yes, the illustrations that were shown to you previously are also based on real market conditions, but let us go to the charts. And what is the best chart to start with? It is the euro dollar. All right, so now we are entering into the realm of forex and we're going to look at gold as well. So let me just quickly go to the daily time frame. Let me put trading view on. All right, so we're going to be looking at euro dollar. Now in terms of trend lines, let me quickly showcase you in terms of how we draw trend lines and why trend lines are important. All right, trend lines are lines that are basically drawn with with a point in mind that we want to connect as many pivot points as possible. Now, many people might be asking, Harsh, what exactly are pivot points, right? I know a majority of you are aware, but for those who are attending this particular live streaming session, remember we are starting with the basic technical trading strategies, correct? So we want to make sure that people who are new to the financial market, this is the live streaming session that they should be joining into. This will cover up the basics in terms of how to start looking at technical analysis, what to look at when you're starting new, when you're starting afresh in technical analysis, correct? So pivot points are basically turning points. Wherever price turns from one direction to the other, the corner points, as you can see, I'm marking it with the orange color dotted lines. These are called as pivots, right? So pivots are basically turning points. I hope people can see my screen. Perfect. So as and how these pivot points are created, we are marking them with, you can use either the highlighter or you can use a circle and mark them like this as well. All right. But nonetheless, people are clear with what pivot points are. Let me connect as many pivot points as possible by using the tool called as path, or you can use a polyline, correct? So we have a polyline and we have a path. Let me use the path and let me draw the pivot points. Remember, I'm just connecting the dots of the pivot points so that I can show you the swing movement, correct? As you can see, the prices are clearly in which trend. Come on, you can comment down. And remember, these live streaming sessions are, to be interactive. It's not just about me being the teacher and, sharing information. It's about we having an interaction, because if you're able to have an interaction, I'm able to understand what are you able to understand and what you are not able to understand, correct? So I can do my due diligence and I can modify and adjust my teaching in such a manner that I'm able to cater to the majority of this group. Remember, as and how we are growing, we are having a lot of inquisitiveness, a lot of curiosity coming in from a lot of people, and our community will be growing at a substantial rate, correct? So I have to make sure that I am able to inform everyone as a whole. For those people, अगर आपको लगता है कि आपकी इंग्लिश कमज़ोर है और आप चाहते हो कि मैं हिंदी में भी बात करूं, तो प्लीज़ आप कमेंट बॉक्स में लिखिए कि हर्ष, yes, please talk in Hindi as well. Remember, we have people who understand English, we have people who understand Hindi. I can talk in both languages and I will try my best in order to accommodate everyone in this community. So coming back to trend lines, as I had mentioned, this is basically called as an uptrend, right? Uptrend, or you can just call it as a bullish trend, correct? So trend lines are lines that are able to connect as many pivot points as possible with the prices appreciating in the particular direction. Since we are talking about uptrend and bullish trend, we are connecting the dots with as many price points as possible. So I hope people can see, the more number of points are connected, the better, right? So we have a connection here, we have a connection here, we have a connection here, we have a connection in terms of a test on the pivot, correct? And this is what we call as an uptrend or a bullish trend. Now similarly, let's look at the example of a bear or a downtrend, correct? Now in terms of downtrend, let me give you a clear example. So I hope people have understood what a bull trend is, correct? Now let me show you the other example of what a bear trend is. Again, with the same analogy in mind, to connect as many dots as possible, as you can see over here as well. Remember, when we are drawing trend lines, the main criteria for drawing a trend line is you can cut the wicks. Remember, the wicks are the cornermost portions of a candle, which indicate the high and the low, the extremities of a particular candle, correct? Now, how high the particular candle is gone, how low the particular candle is gone. But the most important aspect of a candle is the body. So when you're drawing a trend line, it is fine if you can cut the wicks, but never cut the bodies, right? That is the main rule when it comes to drawing a trend line. So similarly, for this particular example, as you can see, with the number of points being tested upon, correct? With the number of pivots being tested, let me use the path to draw a clear downtrend. So prices have been going up, down, right? Up, down, up, down, up, down. So this is where the trend line is holding and the prices are continuing in the downward fashion, right? So such a trend line is called as downtrend, or we can just call it as bearish, right? So this is what a trend line depicts. Trend line depicts the trend, the overall flow of trend, right? It's a visual depiction. So we talked about uptrend, bull trend, we talked about downtrend, bear trend. Now let's talk about sideways, correct? Now when it comes to sideways, let me find you examples where prices are consolidating sideways, correct? Now, certain patterns, remember, do they have to be exactly the same? Not necessarily. Sometimes there might be, some kind of manipulations, and we would be talking about manipulations later on, maybe in the mid or advanced trading strategy. But nonetheless, for prices which are going sideways, right? Let me just showcase to you with as many number of touches as possible. We call this market as sideways, where prices are just consolidating sideways. There is no clear direction when it comes to price moving. So we call this as sideways, correct? Or we call this as neutral, right? Neutral trend or sideways trend, when prices are not clear in terms of direction and prices are consolidating, prices are going sideways. So this is the basic example of a trend line. Now let's look at the next one, that is called as channel. Now similarly to a trend line, we have something called as a channel, where instead of having one trend line, we have a duplicate trend line above it, exactly parallel to it, correct? So based on the illustration that you can see, since the prices are moving in an upward fashion and it's between the two parallel trend lines, we call this as an uptrend channel. Similarly, we have a downtrend channel where prices are continuing in a downward fashion and the channel is holding the prices. So it's more of a ping pong ball, right? You have two paddles and the ping pong ball is just oscillating between the two channels, between the two trend lines. Remember, two trend lines make one channel, correct? And similarly, we looked at sideways channel, correct? So let us go back and see in terms of examples. Let me put gold, and we will look at how gold is reacting, right? We are going to be looking at channels in the gold markets. Now, in terms of channels, let me show you an example. We have a very clear example over here of an uptrend channel, correct? So as you can see, prices have been consolidating upwards, correct, in an upward momentum, where prices are bouncing from one pivot, uh, from one corner of the channel to the opposite corner of the channel, so on and so forth. So this is where we have uh, a channel where prices are holding by going up and are also reflecting by the opposite side. So this is what exactly a channel consists of. A channel is a trend line which is duplicated onto the opposite side. So prices are moving within, right? We have points of contact at the corners of the trend lines, and that creates a channel. So I hope everyone has I hope everyone has able to understand. We have been talking about channels, so we talked about trend lines, just how a trend line is based on a single line connecting as many pivot points as possible. We are talking about a channel which is basically a trend line and a duplication of that trend line, so that price is between the channel and price acts as a ping pong between the two. All right, so this has been called as an uptrend channel, right? So uptrend channel is something like this, where prices are oscillating in the upward direction inside a channel. Now let's look at a downtrend channel. So downtrend channel is again something similar, where we have prices sitting between, two channels, two trend lines that are duplicated. And as you can see, let me draw it with a polyline, or using a path. So we have this. Prices are continuing in a downward fashion, and prices are oscillating between the two trend lines, correct? So we call this particular formation as a downtrend channel, correct? Remember, there should be the more number of tests the channel is able to have, the stronger the channel is, correct? Very important. We do not want a channel that has only one or two tests. We want a channel that has minimum of three tests, right? So the more number of tests, the better, correct? The stronger the channel is. And since it is continuing in a downward fashion, it will be called as a downtrend or bearish channel, correct? Downtrend channel. So we talked about uptrend channel and we talked about downtrend channel, and we would have a quick look at what sideways channel looks like. Similarly to the example that was shown on euro dollar, let me just go back to euro dollar so that it showcases the example that we have been looking for. Okay, maybe I've deleted the lines, but sideways channel is this particular example, right? Where prices are just continuing sideways. There is no clear direction when it comes to, the channel. So this is what we call as sideways channel. Now I hope people are able to understand. Remember, I'm trying to keep the basics. We are providing you with the basic trading technical strategies, and I'm trying to be as elaborative and as practical as possible, right? So we looked at channels. Now let us look at the next concept, which involves breakouts, correct? Now that we are talking about breakouts, let me go and quickly make you understand in terms of what a breakout is. We talked about channels and we talked about trend lines. Now there will be a point in time when the channel or the trend line is broken, and once it breaks, the phenomenon that takes place is called as breakout, right? Or we call it as breakout strategy. So the moment we have prices that the downtrend channel, or sorry, the downtrend trend line has been holding, right? The bearish trend line has been holding, and the moment the prices are closing outside the channel, trend line, that indicates that for this particular example, the prices which were initially bearish have now converted to bullish, right? So there was bullish sentiment, the trend was bearish, and now the trend has reversed. The sentiment has changed from bearish to bullish, right? So this is what a breakout looks like. So we are looking at currently a bearish to bullish breakout. Then we are going to be looking at a bullish to bearish, right? Remember, the markets can move only in three directions. Either can be moving in a bullish direction, a bearish direction, or a sideways or neutral direction. So coming to an example from where prices were initially bullish, with prices oscillating between the uptrend channel. Once the price closed outside, that signifies that now the prices have shifted from a bullish trend to a bearish trend. The prices have shifted from a bullish sentiment to a bearish sentiment. So these are examples of bullish and bearish breakout strategies, right? Let me show you an example when it comes to the charts, right? Let us use another example such as GBP dollar. Remember, we are talking about Forex markets, right? And all these are happening on real time trades, correct? We are looking at it on the real market. So these are not just hypothetical. These are happening, consistently in the markets every now and then. So we just want to identify these structures and be very clear in identifying them, correct? Not just identifying, but understanding what structure stands for what purpose. All right. So similarly to the example that I had showcased you, we had a bearish trend line, correct? Now this bearish trend line, the moment the prices are breaking above, let me mark it with a highlighter, correct? So the moment the prices have closed outside, right? This indicates that now the trend that had been bearish has been converted or has been transferred from bearish to bullish, correct? So now this is called as a breakout, correct? And such a breakout indicates that now the prices which were having a bearish trend or bearish sentiment have now been converted to bullish sentiment. So breakout trades are great in understanding reversals, correct? There are only two major segments when it comes to technical analysis. You have patterns that are in continuation, and there are patterns that are in reversal. So such a pattern where prices were traveling in one particular direction but have reversed in the opposite direction, these are basically called as reversal, right? Do not worry, we'll be talking more in detail maybe in the next streaming session tomorrow, or maybe day after tomorrow's streaming session, right? But anyways, in a nutshell, they are called as reversal patterns, right? So these are breakout trades where prices were bearish, the breakout took place, and the prices are continuing in the upward direction. Let me show you another example from a bullish to a bearish. Similarly, we had a structure right over here where prices were more or less oscillating between a channel or a trend line. The prices were initially bullish, correct, as you can see. But the moment the breakout took place, let me mark it with a highlighter. The moment the breakout took place, this is when there was a clear indication that now the prices are wanting to, are wanting to shift direction from bullish trend to bearish trend, from bullish sentiment to bearish sentiment. And that is exactly what has happened. So such a phenomenon that takes place where the prices were being held by an uptrend channel or an uptrend line, a bull trend line, and once a breakout takes place, the prices shift the sentiment from being bullish to bearish, and this is called as a bullish to bearish breakout. I hope people are able to understand. The previous example we showed was a bearish to bullish breakout strategy, and this is called as a bullish to bearish, right? So let us go back to the PowerPoint and understand other concepts, right, when it comes to technical analysis strategies. Now, people would be very much aware, whoever starts in the field of technical analysis always starts with the basics, right? Trend lines, channels, and the next important aspect is support and resistance. I'm sure pretty much every one of you are aware what support and resistance is all about, but nonetheless, since this is a live streaming session which is focusing on the basic technical trading strategies, we will cover up in detail as well. So, support is basically an area on the price chart that has been holding prices from the below. The support, the best example for me to talk about a support is the floor of your house. All right, once you are entering your house, you are standing on its floor, correct? You cannot go below the floor unless you break it, correct? So if you're standing on the floor, or the best example would be for you to have a ball in your hand and you drop it on the floor. The moment you drop a ball on the floor, the ball will bounce. Similarly, a support is also called as a floor, where prices, once they test the support, they reverse back, right? They bounce back, and that is what a support is. Similarly to support, we have something called as resistance. Now, how I gave you the example of a floor of a house, correct? The resistance would be acting as the ceiling, correct, on top of us. For if example, if we had a ball and we threw it on top, it would bounce the ceiling and return back, correct? So a resistance is nothing but a ceiling where prices continue to and get pushed down. So we only have two types of structures, support and resistance, right? Now let us go and see for examples when it comes to support and resistance. All right, let us open the GBP dollar chart and let me remove all the drawings and let me showcase you the first example that we will be focusing on is going to be resistance, right? So as you can see, we are going to be talking about resistance. So prices had been continuing in an uptrend fashion where prices reacted once, and then the next time prices came, the resistance, also called as ceiling, correct, made prices continue lower. So such a structure that is being held by price, correct, is called as resistance or ceiling, right? If you throw a ball to the ceiling, the ball cannot go outside the ceiling, right? It holds it. So that is exactly the purpose of what a resistance is. Similarly to resistance, we have support, right? Support, on the other hand, is an area where prices are being held from below. So such an area where prices are being held from below, acting as a floor, correct? For prices to push. This kind of a structure is called as support, correct? I hope everyone is understanding. So a resistance is where prices are unable to break above and continue down, and support is where prices are able to testing and are unable to continue below, and they continue in the opposite direction. They go upwards. So this is the basic definition of support and resistance. Now let us look at the next example. Sorry, next concept. Correct, when it comes to technical analysis strategies, we will be talking about support resistance breakout. Now, like I had mentioned to you previously, how a trend line can be holding price for a lot of time, but eventually will break, right? Creating a breakout structure or a breakout strategy. Similarly, we follow the same concept but based on support and resistance, right? So as you can see in in the current example, once prices are coming to an area of resistance for this particular example, and for some reason the resistance is not able to hold and prices break above, that indicates that the support has been taken out. Not just that the support has been taken out, but now sorry, not just the resistance is taken out, but now the resistance is converted to a support. Whenever a support or a resistance is taken out, it becomes the opposite side. So for this particular example, we had resistance in place, that was taken out, and now that resistance got converted into support, correct? I hope people are able to understand resistance getting converted to support. Let me showcase you examples of a resistance to support breakout and a support to resistance breakout, right? Let us go to the chart and we will see. Similarly to this particular example, this is a very good example that we can focus on. Let me delete the below box, right? This is a very good example and a practical example. Remember, it's happened in Feb. So it is something that has happened on the charts in this year itself. As we can see, the prices have been holding resistance not once, not twice, right? The third time there was a breakout. So the moment a breakout takes place, as I had mentioned to you, the entire concept flips. Rather than prices being at resistance, now the prices will be acting as support. So let me just draw it to you. Let me duplicate the box and let me change the color. So what acted as resistance has now become support, right? So these structures are called as resistance to support breakout, right? And onto the flip side, right? Let me show you an example where support was holding and that support has been taken out by resistance. It's very simple to understand, but very crucial, right? When it comes to understanding how the markets behave and why the markets behave the way they do. Similarly, as I've shown you resistance to support, now we are going to be looking at a support to resistance. So you can clearly see this was an area of support where prices have been holding. The next time prices break, they flip from being a support to becoming a resistance. And now prices you know, which were being held by prices continuing up are now taken out, and such areas they react in the opposite direction. So a support gets converted to resistance after it has been taken out, right? Once a breakout occurs. So make sure that people are able to understand the breakout is necessary, right? Very important to keep in mind. This is the current breakout. So prices which were bullish have now been which had bullish sentiment now have bearish sentiment, correct? I hope people are able to understand in terms of where you know the retest took place. It's right over here. So such trades where a support is holding or a resistance is holding but gets taken up, so the support gets converted to a resistance and vice versa. The resistance gets converted to support. So this is a clear example of a support resistance breakout or a resistance support breakout. Now let's look at the other concepts. When it comes to technical trading strategies, there is something called a squeeze and breakout. Now this particular concept is similar to the breakout strategy that we have been talking about, right? In place of a trend line, now you have either a channel, or you could have a pennant, or you could have a triangle. There are so many different shapes, right, when it comes to analyzing the markets in terms of drawing. So in the example that you can see, it has been more of a channel or a constricting channel, right? More like a wedge. And prices have broken out, and the moment a breakout takes place, that indicates that now the pressure, the sentiment from bearishness has been converted to bullishness, right? The downtrend has been converted to an uptrend. So this is the typical example that we had seen. Then we talked about support resistance breakouts. Now a very common structure that is similar to a support resistance breakout is called as double tops, right? Now double tops, as the name suggests, basically has two pivots or two tops. So we also call double tops as M formations, the alphabet M, correct? M formations or double top formations. On the contrary, like a double top formation, we have double bottom. But please bear in mind, In a double top formation, the key aspects to look at are the pivot points, minimum two pivot points, and a neckline, the base of, it's like two mountains having a base. So the base is called as a neckline. And the moment the neckline is taken out, a breakout takes place. That is when the prices are expected to continue. Double top or M pattern formations, correct? Then we have, onto the contrary, we call them as double bottom. Now, similarly to a double top where we had two pivots on top, in the double bottom we have two pivots at the bottom, and a double bottom is also called as a double formation, correct? So we have M formations and W formations. Now, similarly, the only difference is that in double top we had prices which had broken below and had, and were expected to continue with a bearish sentiment. For double bottom, the prices have broken above and are continuing in a bullish sentiment. The other way to analyze double tops and double bottoms when it comes to having targets is based on the arrows that you can see. So the distance between the neckline and the opposite corner of the pivots, right, is where we expect the prices to travel to. So the arrow that you can see are identical. I have duplicated the arrows and have put it above the neckline. Once the prices break above the neckline, we assume that the distance between the neckline to the pivot is the equal distance should be traversed by price in terms of achieving its target. So this is one of the nugget, right? Golden nugget, as we call it, as in terms of providing you with additional value, correct? Not just what the double top or double bottom is, but where you can expect prices to continue based on targets, right? Based on drawings, based on identical movements from the neckline to the pivot, right? In terms of knowing where a target can be placed. Let us have a quick look on term on on another pair. Let us type a pair called as Oscillator. I'm pretty sure everyone is aware, right, of this particular pair. So double top, one example that has come right in front of our face is this, right? So let me indicate it with a polyline by drawing what exactly a double top looks like, right? So as you could see, we have this particular double top formation and we have the neckline, right? So we have two pivots, right, which I've created onto the upper side, creating the formation of an M, of the alphabet M, and these are called as double tops, with the main focus being put onto the neckline, correct? The neckline. Let me change the color. So this is what we expect, that prices should be continuing, right? The moment the breakout takes place, let me change the color. All right, this is when we expect prices to continue down, right? So double top and double bottom. Now for people who are asking in terms of its movement from the top to the bottom, it hasn't been identical, but nonetheless you have to understand the markets are not based on identical movements, but more or less has the prices kept continuing downwards once the breakout has taken place? Yes. So for a double top, the moment the breakout takes place, that indicates that prices will continue down. Now let me show you another example of a double top, right? So we have another example right in front of us where we would be identifying a double top. So let me draw it to you. We have a double top formation, sorry, double bottom, my bad. We just covered the double top example. Now we would be covering the double bottom, correct? So we have again identical pivots next to each other, creating a W pattern formation, and we have a neckline, correct? The moment the neckline has been taken out by the process of breakout, correct? Let me write it out. So I have to be clear that people are able to understand, correct? The moment there is a breakout taking place, that indicates that yes, now the sentiment is bullish, right, for a double bottom. So double bottom is also called as W formations, and double top are called as M pattern formations, right? So this is a very crucial example and very important, very basic yet important illustration when it comes to candle formations, right? Let's quickly look at the other concepts as well. We would be looking at head and shoulders, right? I'm pretty sure everyone is aware of the head and shoulder patterns. Again, a very simple but very effective chart pattern formation, right? We have a shoulder on the left, we have a head on the middle, and we have a shoulder on the right. So we have two shoulders and a head, just like us, right? We have two shoulders and a head. I hope none of you have two heads, correct? So this is called as a head and shoulder pattern. And let us see an example, right? Because we want to be realistic. I want to show you with real examples. So let me show you an example of a head and shoulder, correct? So a typical head and shoulder pattern will be looking somewhat like this, where we have a left shoulder, a head, and a right shoulder. And the moment prices are continuing, they will continue below. So similarly to a double top and a double bottom, we have a neckline on the head and shoulder as well, where we have a left shoulder, we have a head, and we have a right shoulder. The moment the neckline has been taken out by the process of breakout, correct? That suggests that yes, now the prices would be continuing in a downward fashion, right? Will be traveling down, right? Will be continuing in a bearish movement. So this is a typical example of a conventional head and shoulders pattern, right? Let me get back to trading to the slides. Like we have the typical example of a head and shoulder pattern, we expect that once the breakout takes place, we expect prices to continue low. We have many different forms when it comes to head and shoulder patterns, right? We have the typical head and shoulder patterns, we have inverted head and shoulder patterns. Since the markets are practical, the markets are not exactly textbook examples, right? There might be sometimes where the left shoulder is bigger than the right shoulder, the head is a little smaller. So we are going to have many variations when it comes to it, right? As I was mentioning, there are basically two patterns when it comes to technical analysis. We have continuation patterns and we have reversal patterns, right? So in continuation patterns, we have different patterns like flag patterns, pennant patterns, falling wedge patterns, ascending triangle patterns, symmetric triangle patterns. There are so many. I'm sure you can take a screenshot, or if you want this particular slides, do not worry. When Harsh is here, there is nothing to fear. I can make sure to provide you. My team of assistants will do the needful in terms of providing you, right? When it comes to reversal patterns, like we had mentioned about double top, triple top, head and shoulders, bearish, rising wedge. So these are certain pattern formations which were continuing in a particular trend, but then they get reversed into the opposite side, correct? So such patterns are where we would be, having a lot of detailed discussions as and how the time progresses, as and how we would be focusing more, correct? A typical example of a continuation pattern is the triangle formation, right? Where prices were continuing in an upward direction, prices started to consolidate and they broke. Again, a breakout took place and prices continued higher. Then we have basically two types of entries, which are entry on breakout and entry on break and retest. So a typical downtrend movement with consolidation of price leading to a price breakout. These are breakout examples, right? In this particular case, because the prices were bearish, it's called as a bearish breakout, all right? But when it comes to reversal, as you can see, the trend was bearish, then the prices started to consolidate sideways only for prices to reverse. So such a pattern is called as reversal. So we looked at continuous patterns and reversal patterns as well, correct? In terms of retest, retracements, we had covered this in the previous topic, where a trend line gets taken out by breakout and the prices reverse, right? From bearishness to bullishness in terms of this example. And in terms of break and retest, right? Generally, when prices break a particular support or resistance or trend line or channel, there is general tendency for prices to come and retest before they continue up. So this is another important concept when we talk about break and retest, right? So I hope people have been able to understand. I hope people are able to, get a clear understanding in terms of what the basic technical trading strategies are, because they might be basic, but they are very crucial in one's trading success, right? So please make sure that you spend a lot of time. But all the other examples that I have currently given, this is again a typical candle formation with a breakout and a retest and many other trades, right? So we have covered majority of the topics when it comes to the basics, when it comes to the basic technical trading strategies. I want to give you a small homework when it comes to, or a task, right? Let me not call it as homework, but a task. I want you to go and pick any three forex pairs, right? I want you to pick any three forex pairs, and I want you to mark, trend lines on those pairs, right? So trend lines as in bullish and bearish and sideways, right? So I want you to go, I want you to practice, right? By drawing trend lines, I want you to draw channels, I want you to identify double tops and double bottoms. All right, pick up three forex pairs, and you can, do as much of analysis, and the more analysis you do, the better for you, right? The more clearer it will be for you. I want you to go and identify double tops and double bottoms. I want you to go and identify head and shoulder pattern, and I want you to go and analyze breakout patterns, right? Breakout patterns, right? We talked about continuation patterns and reversal pattern. So whatever has been taught to you today, just in a nutshell, I want you to make sure that whatever has been discussed today, right, it is of crucial importance that you pay attention to this, right? The more practice you do, the better you are able to practice, the more successful you can become in trading. So if you're able to clarify your basic trading strategies, I'm pretty much sure you can do much better, right, in your trading journey. So I hope everyone has had a good time learning. Uh, Technical analysis, we covered the basic technical analysis as you can see on the screen: trend lines, channels, breakouts, double tops, double bottoms, head and shoulders, continuation patterns, reversal patterns, breakout trades, so on and so forth. I hope everyone has had a great time learning. Please do utilize the time and do as much of assessment on your own when it comes to analyzing certain chart formations. If you have any doubt, you can always get back to me, or you can get back to my team of assistants, and they will also guide you well. So, all right, today's session was pretty informative, was very nice, was very informative, and I hope you have learned a lot. Please make sure to come back again for tomorrow's live streaming session, where we would be again analyzing how the markets are functioning, what the markets have been updated. Today had been a good day. We had been sitting at a cumulative profit of 7%, and it's been fantastic. All right, so please make sure to arrive again for tomorrow's first live trading session by the one and only Harsh. Until then, have a great evening. I hope you have a wonderful time with your friends, your families, your close, near, and dear ones. So until tomorrow, I will see you again. Until then, namaste and take care. Bye bye.